Hey guys, this is Jeff from ZenTrader.ca, and today I want to take some time to step away from the markets and talk, or rather answer a reader question that I had that I felt would be better to do something in this form instead of just type out the email and send it to him, where this is a way that others could maybe share their experiences, chime in, just a way to get some audience participation, I guess, and we'll see how it goes. So essentially, a reader had asked me, and this is regarding the All About Trends service, and he found himself in a double-digit loss, essentially. And he was asking me, he states that they don't have a stop loss when initiating their trades. And his question is that so many books stress the importance of stop losses in their trading, and he just wanted my take on it. Well, actually, his question is, when using a service like All About Trends or any other similar service, does it make sense, based on your trading experience, to use a stop loss order in spite of the fact that they don't recommend specific stocks? And so, there are a lot of good services out there, and the answer is it's not a simple one, but two things that I want to kind of stress that I think are very, very important to consider when you use any kind of service. Number one is that the service resonates with you. You can't be a day trader if you're not built to be a day trader. You can't be a long-term investor if that bores you and you're not a long-term investor. So number one, make sure you pick a service that resonates with you. Number two, integrate that service into your existing trading plan, your existing trading philosophy. So if you are getting stock picks, then you should definitely, if you use stop loss in your trading, then you should definitely use stop losses, even if that trading service doesn't recommend you to sell the position. I don't use stop losses, at least not a hard stop loss. I use more of a mental stop loss. I've gotten tricked, or rather taken out of trades intraday only to see a stock bounce back. And the close is very important to me. So it's not whether or not it dips down below a certain price level. It's does it close below that certain price level. So I definitely think that you should be integrating a service that you subscribe to into your trading plan, because if you typically use a 7, 8, 9% stop loss, and you find yourself down 14 to 15% on a trade, you're gonna end up sabotaging that trade, because you're gonna end up probably selling it because you're going against what you normally do. You're going against your trading philosophy, or rather your trading plan. For instance, you just shouldn't find yourself in a position where you're down 7 or 8%. I just wanted to take a look at the stock that this particular reader had called in about, and I'm not sure exactly where he got long, but I'm looking at this, and I'm looking at, there's a number of areas where I would have exited this trade. Basically, it had a head and shoulders pattern forming, and it broke down below it. So anywhere inside this yellow box, just from a technical perspective, that's not even taken into consideration where he bought it, and maybe once he found himself down 10%, that would have been enough of a reality check that this trade's not working to exit, preserve your capital, save trade for another day. But anywhere in this yellow would have been a good area to exit, and it would have avoided another dollar, anywhere from $1 to $2 in losses. So I'll recap some of the points I made in the post, and I hope this helps. And if anybody wants to share any experiences, please do so in the comments.